Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, I'm going to go through the week ahead analysis. We're going to go over the news for the week ahead and some charts of interest. So, lots of high impact data once again in the markets, and this is going to include 3 central bank rate decisions, and we're going to kick it all off with the US federal funds rate. Now, I've put a little note over here saying that this will be watched really closely because it is the time where the Federal Reserve are under pressure to pause interest rate hikes. Now, there is a forecast of a 25 basis points hike from 4.75% to 5%. So I feel like they more than likely will hike by 25 basis points. The recent running sort of data hasn't really shown too much. The only problem that we saw was the core CPI was a little bit hotter than expected. But with ongoing sort of market conditions, with the global crisis of the banking sector and other outside pressures, I think the Federal Reserve will probably hike by 25 basis points and then maybe talk about pausing in the next upcoming meeting. But this is going to be watched very, very closely. We then have the Swiss National Bank hiking interest rates to 1.5% from 1%. So that's a 50 basis points move. That's quite a strong move by the Swiss National Bank. Again, will they be under some kind of pressure to not hike as aggressively, especially because of the problems with Credit Suisse at the moment, and they've just been bailed out with 50 billion. So it's going to be interesting to see if they continue to hike aggressively, because again, that will put further pressure on the banking sector. We then have the Bank of England looking to hike interest rates by 25 basis points. This has pretty much been set in stone by the Bank of England, so I'm expecting that 4.25% rate hike here. So we'll talk about that more closer to the time. We then finish the week off with some flash services PMI, manufacturing PMI out of Europe, the UK and the US. All looking a little bit sort of lower, apart from sort of manufacturing PMIs and flash services PMIs out of Europe and the UK. So again, interesting end to the week, but I think all the focus really is going to be Wednesday, Thursday, and it's going to be an interesting high volatility week again. So going on to the strength meter, the only thing that really was of note this week, there wasn't too much in the way of change. Despite all the volatility in the market, there wasn't too much change. I think the one thing that still stands out to me is that the Aussie is at the reversal zone at -6, looking to see if that can maybe lead to a reversal and the Aussie may be moving back to the upside. Now, when we're at this -6 level, it doesn't mean that we should just look for the reversal. Obviously, it means that the currency is weak, but could be overextended essentially. So I'm looking to see if the Australian dollar could potentially do one or two things, and then we can kind of look at that from a technical analysis point of view. So for instance, going on to the Aussie US dollar here, we can see that price is in the downward trend. Okay, we're making those lower lows and lower highs. Okay, we've recently made a new low which has found support at the 0 spot 65.75. We've rallied back up into the resistance level of 0 spot 67. Currently price is holding at that level. We're also below the 200 moving average. So the way I'd look at this in terms of the strength meter is that it's still saying at the moment it is weak, could potentially reverse. So if it's going to reverse, I would expect price to trade above the 0 spot 67 handle. Okay, if we get a close above that level, a close towards these highs for instance, that would be a signal for me to say that maybe this downward trend has ended and price might start to reverse. However, if we continue to find resistance here, maybe price starts to sort of consolidate around that area and we get a breakout to the downside of some consolidation, I would be expecting price to continue down to the 0 spot 65.75 handle. Okay, from a buying perspective, we have broken through a trend line resistance as well, so maybe that will add a bit of confluence to that, but we are trading below the daily 200 moving average as well. Going on to pound US dollar then, so obviously we've got the Bank of England rate decision this week. At the moment, price is trading at the 1 spot 22 handle. We have had the nice sort of bullish breakout. We came into the 1 spot 1800 area. We rallied, we broke through this kind of declining wedge pattern. We've then come back to the 1 spot 02 1 spot 2050, I should say, sorry, which are all these highs in here. We found support, price has rallied, now we're back at resistance. So again, it's asking ourselves the question, if the dollar's going to continue to weaken this week, pound may break through the 1 spot 22 handle, head to the 1 spot 23. If the dollar starts to turn a little bit, starts to get a bit stronger, then this area could act as resistance and price could trade to the 1 spot 2050. So I think you've got a couple of dynamics you've got to watch for this week. You've got to watch for both dollar plays this week, depending on what the Federal Reserve Chairman Powell says on Wednesday. Going on to dollar yen then, so we actually talked about potentials for dollar yen to rally above this high. Price didn't get above this high in the end, and we saw the yen continue to strengthen against the dollar, driving price below the 132 spot 75. We haven't closed below that pin candle low, so there could be an opportunity that if price was to trade higher once again, we could see a move and a break above. However, the 130 spot 75 is looking a little bit more likely for targets at the moment for sellers selling into that Friday close. So there could be an opportunity to see it drop a little bit lower before any kind of turnaround in the market. Finally then, gold. So got to admit, defeat on gold. Was very much looking to see it break below the 1800 level and trade lower. Obviously, things have changed dramatically in the past week or so, and you can see that by the move of last week. Look at that candlestick. There's not really even a wick to the top of the bottom, the top or the bottom of this weekly candle. Sorry, that's meant to say weekly, which is amazing, really. You know, that's a very strong move. I actually managed to catch a long trade into these highs here at the 1954 area on the 5-minute time frame, which was a nice move. But yeah, had to admit defeat on gold and change my bias very quickly due to the ongoing sort of impact of what's going on in the markets at the moment. Very much risk off. So when the markets change to that risk off mode, you know, gold rallies, and you can see that. And if that sentiment's going to continue into next week, you know, there's no reason why we can't see price trade through this high or even head to the major range highs at the 2050. If we see price just rally into this level, we may get a little bit of selling coming back, and we may get a bit of profit taken around these highs. Maybe even if it can breach the high, we might get some profit taken. So that's something to consider as well going into this trading week. Thanks for watching this video update. I hope you enjoyed it. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content. And I'll speak to you in the next video.